Hey YouTube, this is Zach with Achilles Financial, and today I think would be a good day to talk about my 2021 stocks. This is the portfolio that I am looking to build out. This is just my watch list. You can see the stocks that I am looking to acquire, looking to build out. A large number of these are already in my current trading portfolio, and I'd like to build on a lot of these positions due to the recent volatility. Again, we've been buying a lot over the past few weeks. And for those of you who are in the Discord, which if you'd like to join, it's in the description below, then I constantly talk about the idea of buying long-term winners and combining that approach with also having some speculative investments in there as well. Now, the advantage to the portfolio right here is that there is a lot of growth potential, a lot of upside potential, and I'd like to think that there is limited downside in a number of these stocks. Granted, some of that speculative nature was tested over the past 2 weeks. The good news is this is a portfolio that is built for, in my opinion, 2025. When I built this portfolio out, which I released earlier this year on January 1st, I said a number of these stocks were what I wanted to own. And the only one that was not was SFTW there at the bottom, which is a SPAC that we'll talk about shortly. So I have done at least one video on all of these companies at this point in time. What I am looking to do here is just talk about some of the year-to-date performance and what I'm looking for them going forward. Most of my price targets that I'm going to have for this calendar year are going to be associated off of current expectations and metrics, and then I'll include a few caveats. One thing that I want to highlight right from the get-go is a lot of these plays are very tech heavy. In fact, all of them have some element of technology associated with them. That being said, this is definitely not in my opinion, a retirement portfolio. This is a very growth-oriented portfolio, and there's been a lot of volatility associated with it. For that reason, I will continue to encourage those of you who are under the age of 30, under the age of 40, and not relying on trading for your 100% income to continue operating under this list, and that this is not financial advice because I'm just some guy on YouTube. But this has a lot of potential, and these are some top tier companies. So just to get started, let's go right down the list. Again, first we've got Nvidia, which is trading right at basically $500 a share. This is a stock that we have been talking about for over a year now. And their big run-up actually came in last year. Again, if we look at the one-year chart, they were actually down at $200 a share near these levels last year. Granted, that was coming right from the end, or rather the very beginning of the COVID pandemic, where we saw a huge decrease in stock valuations across the board. Nvidia trades at a very high premium. Right now, they're at 80 times sales, potentially 70 times sales. Not sales, but earnings. So their PE ratio is very high. And for that reason, I think that this is one to watch because they continue to have high expectations associated with them. I mean, they're bringing in $500 million or $5 billion with $2 billion in profit last quarter. So their growth is insane. Their profitability is insane. But I think that there's a lot weighing down on the stock. Chief among that is we do have 3 solid earnings during the same time period where the stock trades flat. And they also have their ARM acquisition. ARM is a huge company that is also in the semiconductor space, primarily in the processors. And there's going to be a lot of regulator scrutiny associated with that. For that reason, I think that's what's keeping Nvidia from being able and capable of breaking out. The good news is I think this is a great time to build on a position here. There is discussion of some point in time in the future. This is a stock that could split, which would be beneficial from an entry-level shareholder perspective. But even more than that, you could utilize some of those premiums on selling covered calls because they have very high caliber options. And to get 100 shares of this right now would run you right at $50,000. So for that reason, Nvidia is a difficult one to build a large position due to their price. But my price target for Nvidia, and this is, again, just my opinion, I see them around the 625 phase or stage. A lot of that is going to be dependent on what we look at from a tax plan this calendar year, because they have so much gross margin or an even net margin that a tax plan could hit them pretty heavily. But if that tax plan does not go into effect this calendar year, I see a lot of the regulator scrutiny continuing to surround them. And unless I hear different news, I'm going to stick with the price target of 625, despite the fact that they've touched 600 twice now at this point in time. So next up on my list is going to be Salesforce, ticker symbol CRM. This is honestly, in my opinion, the best long-term option that you could possibly get. I equate them at this price to Microsoft in 2010, 2012, where again, the stock is trading at a higher multiple than a lot of its peers in some areas, but it still has so much room to run. Chiefly among this is the CEO, Mark Benioff. Everything the man touches just turns to gold. This is a company that operates as a software company, but they also have a huge private equity and venture capital fund that they are making huge gains over the past calendar year, and they make continuous strategic acquisitions. This is a multi-billion-dollar company that continues to perform at just an incredible level. I mean, they grew last year's sales 30% as a multi-billion-dollar company. And for that reason, I just rate them an incredibly strong buy. This is one that, again, has a lot of rip and then dip, and they've been kind of holding these levels. And for that reason, I think that we're going to continue to see kind of this back and forth movement with them. But they just continue to outperform. There's been a lot of scrutiny for them surrounding their acquisition of Slack. But once Slack gets integrated and they start firing on all cylinders, I think they only have catalysts ahead of them. And for that reason, this is one of my higher growth targets for them. I think in December of this calendar year, again, pending the key thing for, or the key caveat for all of these, I think is going to continue to be the tax plan. I see this company at $285 to as much as $300 a share. The reason for that is because if they can integrate Slack, if they can get their ducks in a row and achieve that profitability, this stock goes up easily to those levels. They're trading at a relatively low PE ratio in the 30s for a company of this size. So going to be watching it, going to be checking out. And I think that 212 is a lovely level to be buying it at. The next up is going to be in the gaming space. So this is a Chinese company. This is NetEase. When we first initiated our coverage on NetEase, they were trading at $85 a share. And it's been awesome to watch this stock continue to climb. I know a number of people in the Discord hopped out of this about 120 when we were talking about it. I think that this is a great buy level again. You're seeing some of the Chinese tech kind of struggle right now, as well as the broader tech sector. So this is a stock that pulled back pretty heavily. They do have a dividend, which is great, but their cash flow is very, very strong. And I think that this is the equivalent of kind of like a Activision or an EA for the Chinese market. And the Chinese gaming market is huge. One of my concerns with a stock like this is, again, they are just the American depository shares. So US investors don't necessarily have the same rights as you would if you own the actual company over in China. Although I don't know if this is listed on the Hong Kong Stock Exchange or not as well. But that all being said, there is still a lot to say for having some of this exposure for some of these companies, because they just have a lot going for them. And you've seen that with JD.com and Alibaba.com as well. Just a lot of potential. For that reason, I think that this stock actually does hit a new high this year. From current levels, I see them back to that 140 price point. My old price target on them was 120. And they kind of blew past that, but I thought that was a little overextended. So I think that they're going to be back at that 130 to 140 price point, their previous all-time high. If they continue growing their market share, they also have a few new games coming out this year, which could benefit them. Next up on the list, we have Draftkings. Draftkings we've been talking about. I've got so many videos on Draftkings that, again, we've been talking about this since they were $38 a share. And I have not purchased any additional shares since that point in time. And some of the reasoning for that is because I love the stock, love the company, but we are getting a lot of wind behind it. I would like to buy this again on a pullback. We didn't really get that during the broader tech pullback. My price target on this stock is $100 a share. A lot of that is based off of other analyst feedback. My only concern is they are growing incredibly quickly, but they are having to pay for that growth. I'd like to see this be the year some of that payment get kind of recycled back into some profitability metrics, especially as sports continue to return to normal and as states continue to legalize online gambling. I think this is a stock that has a lot of catalysts going for it and not a lot of detractors at this point in time, especially if they can get their profitability ducks in a row. Next up on the list, we're going to be talking about StarPeak Energy. What a wild ride. This is a SPAC that is being taken public, or is taking public, STEM Inc., which is a smart energy software company that is located here in the United States. And StarPeak is the SPAC. Now, this one has a wild swing. You can see they were actually up over $50 a share. It was like $51.50 or something. And then they dropped back down all the way to $20 a share. This is one in the Discord that we have been just talking every single day. I'd like to say I was able to convince a lot of the viewers to invest in there. This is my largest holding by not even close. I continue to add to this position, and I think that this is a $75 stock by the end of the year. We're talking 2025 predictions. It could be $300, it could be $700. Great stock, and this is one that I am going to continue to add to because there's just so many different benefits associated with it. They're a first mover in the space. They're already profitable. They're dominating the industry. All of their revenue is already locked in for 2021. They just need to get, or all their bookings, they just need to go deliver on it and count that as revenue. I'll put a card up with one of my videos right now so you can see this stock because I love this. I've bought it at $26 a share. I've bought it at $23 a share. I've bought it at $42 a share and $38 a share. So I've averaged up on this. I've averaged down on this. I still think it's a great stock and one that I'm looking to continue to invest in. The next one is in a similar boat. This is DMY Technology Group Inc. 2. The reason I clarify that is because there is a DMYI. And this company is taking Genius Sports Interactive. This is a data analytics company for sports betting. And their primary customer, you may know them from, right above, is Draftkings. So one of their big customers, Draftkings, they also service FanDuel and Paddy Power, which is a big UK-based company that is online gambling. So this is a company that specializes in the online gambling space, and I have a price target on them of $25 a share. They got relatively close to that, at which point I did liquidate that position. I'm back in it now at $15.50. This was a position I picked up this past Friday. And the only concern with them is, again, they still haven't announced their merger date. I'd like to see them go ahead and have that acquisition closed up and it does become Genius Sports, where it will trade under the ticker symbol GENI. When that gets completed, I'll feel a lot more comfortable. But again, profitable company and great all around. For that reason, I am going to continue to rate them as a buy. Next up on the list is TSM. This is single-handedly, in my opinion, one of my greatest investments. Picked this up at $54 a share, sold it at the 120 mark, and I'd like to get back into the stock. The reason for that is because they are the chief supply chain group for all semiconductors. So you see AMD on the list, you see Nvidia on the list. This is a key supplier for both of those, as well as a host of other companies. They're getting hit with that pullback, but they pay a dividend, albeit it's a small one. They have so much runway, and this is a safer play than I would say an Nvidia or an AMD, which you see below, because it's more of a static company. The only risk is they are based out of Taiwan, so any China, Taiwan, I would say international conflicts could obviously affect the company. That's one of the reasons why I like it, but I don't necessarily want to devote my whole portfolio to it. But not only do I own a few shares, but this is one of my key holdings in a 401k account outside of TD Ameritrade through my workplace. So for that reason, I think this is a great long-term investment because they are on the supply side. this is kind of how I would say if Nvidia is your gold mine, TSM is the one selling the picks and the hammers. And for that reason, there's still a ton of value to them. I'd like to buy them under 110. So right now we're still going back and forth. If you see them under 110, I think that's the buy point. End of the year, I see them at 130. So that being said, there's not nearly as much growth, but you got to remember this is one that pays a dividend, as well as the fact that this is more of a slow mover type of stock that still has a lot of potential. Great for covered calls as well. Next, as we go down the list, we've got AMD, very similar boat to a Nvidia. I love Lisa Su, who is their CEO. They continue to execute, continue to dominate, and they're eating Intel's lunch when it comes to achieving market share. And for that reason, I think that they are a fantastic budget option company. And the pricing here is awesome. They've been all the way up to like $96 a share, $95 a share. I'd like to see them back there by the end of this year. They continue to have a lot of pushback from Intel. I think that is going to continue. And for that reason, I'd like to see them at this level I can get behind. But what I want to see is that continued sales growth. They're growing at like 50% annually. They're not nearly as profitable as Nvidia, but they still are maintaining like a 20% net profit margin. If we can watch this growth continue, I'd like to see this company back at 95, and they have the capability to be a big mover. If you see them over 100, if they don't break past it, I think that's a good sell point, and then you can get back into the stock. But this is one that I really, really like. Again, if you are new to the stock scene, then it's a great pickup, relatively low entry point. And if you are not new, then I'm sure you've heard of AMD. So last on the list, just to again kind of get additional exposure, is we have Osprey Technology Acquisition Corp. I'm interested, we can go to the 1 month because this is a newer company. So we can get the 1 day. I guess they haven't been out for a month yet. But this is a company that is acquiring or going public. Another SPAC. This is my third SPAC on the list. So this company is going public with Black Sky, which is a satellite imaging company that does a lot of data management and surveillance. They are looking to be profitable a lot sooner than other space plays. I like this as a spec pick because the acquisition gives a little bit more power to shareholders than other acquisitions. They have a clearer path to profitability, as well as I want some of that space exposure. If there was one stock on the list that I said, hey, I don't see this as a long-term winner, it would be this one, just because there are too many variables and they're coming to market with a very high valuation. For that reason, this is my most speculative play. But that being said, there's still a lot of potential for it to go up. Right now it trades at $11 a share. If the acquisition goes through this year, there's no hiccups, and they go public, then I think that this is a company that we could very easily see at $25 to $28 a share by the end of this year. Again, there's a lot of ifs, ands, and buts, so keep that in mind. But it is a company that I like a lot, and I have the capability to buy 100 shares and not look at it again and just hope that it goes up. But all that being said, these are my 2021 stocks. This is the portfolio that I am looking to build for 2025. So at this point in time, I'm very happy with a lot of the performance thus far this year. We got hit hard with the tech pullback, but I doubled down on a lot of these positions, and I anticipate I'll continue to do so. So all that being said, if you want to know when I'm buying and selling these stocks, check out the link to the Discord in the description below. And if you want to be more actively involved, then please click that like button, hit that subscribe, and let me know if you found this video helpful. Thanks. I will talk to you all later.